Do you speculate on instinct without a real method, not knowing when to buy, when to sell? Do you often find yourself against the market trend and accumulating losses? Do you have the impression that the stock market is not for you? Then it's time to act now. You can no longer afford to foolishly waste your time and money. You keep making the same mistakes, taking unnecessary risks, and making the wrong investment decisions. Stop! I said stop! Stop messing around, and finally take the time to train. No one has ever succeeded in the financial markets by launching in without training. Even Warren Buffett trained. If you believe you're better than everyone else, then I wish you luck. Regardless of your knowledge or experience on the financial markets, if you really want to succeed in these markets, generate additional income, make your assets productive over the long term, and even achieve financial freedom, then act now. It's time to give yourself the means to succeed. To act is to no longer count on luck to succeed in the financial markets. If you rely on luck, your probability of success is as high as that of winning the lottery. To act is to acquire the knowledge necessary to give yourself the means to succeed. With training, you have all the tools to become a profitable investor. To act is to accept that success does not come without work. All you need is the motivation to generate additional income. To act is to determine your goals for the next few years. Do you want to continue your everyday life or build up your assets and enjoy life more? The choice is yours. If you want to act, then listen carefully to what I'm going to tell you in this video. We're going to discuss the path to your financial market success. In a few moments, I'm going to tell you the method used by successful investors. I'm not here to give you a magic formula or a turnkey strategy. We talked about that in the previous video on the 5 mistakes that ruin your chances of success in the financial markets. If you haven't seen that yet, I suggest that you take a look at it now. I'm here to give you all the knowledge you need to develop your own miracle strategy. All you have to do is let yourself be guided step by step towards success. Learning this knowledge is done at your own pace, depending on the time you have available. The aim is not to look at various content, tools and tips as quickly as possible, but to put this knowledge into practice. As you learn, you will most likely have a lot of questions. I want you to know that I'm here to answer them at any time. I'll be with you every step of the way until you have success in the financial markets. It's through training that you will make rapid progress and achieve concrete results. For many years now, I've been accompanying novices or investors on various financial market sites, including Central Charts. They prove every day that solid training is much more applicable than a ready-made recipe. If it works for them, it will work for you. Now, let's get to the heart of the matter, how to profit in the financial markets. To do this, it's not enough to simply have a list of rules to follow. You must bring everything together. It's each element put together that allows you to generate your first gains, then gradually improve your performance until you get the additional income you want. You have to be able to address 3 crucial questions to succeed in being profitable in the financial markets. Which assets to buy and sell? When to enter and exit positions? How to protect your capital? To answer these 3 questions, you need to acquire solid knowledge and know how to use the right tools. You'll find that with a little work, it's quite simple to profit in the financial markets. Let's first look at which assets to buy and sell. This question hides 2 important elements. The first step is to identify assets with strong bullish or bearish potential. The aim is to avoid going against the market and incurring losses. To do this, you must determine the trend. Contrary to what many novices believe, this is not done on the time frame on which you take a position, but on a longer time frame. Next, you need to identify patterns that are repeated over and over again on the charts. These patterns can be with a chart pattern, a Japanese candlestick, or a technical indicator. All these patterns will tell you the direction of the next price movement. Instead of spreading yourself too thin trying to monitor all the financial markets, stock indices, commodities, etc., concentrate on a few financial assets. Good opportunities are everywhere, so stop looking for the perfect trade or the trade of the century. Only once your strategy is well established can you try applying it to other types of assets. You avoid wasting precious time trying to monitor everything and then doing nothing. Instead, spend this time training yourself well. By focusing on a few assets, it's much easier for you to know what to buy or sell. Another important element that's often overlooked is knowing which financial product to use for buying or selling. The choice of product has considerable impact on your performance on the financial markets. Buying a share directly or through a limited risk CFD is not the same thing. Similarly, Buying a market index with a CFD or a future is completely different. The cost of a transaction is not the same. The functioning of the product is not the same. The liquidity is not the same. The position size is not the same, etc. It's therefore essential to understand the advantages and disadvantages of each product to choose the one that best meets your needs and maximize your performance. To answer the question of which assets to buy and sell, you actually have to answer two questions. Not only how to choose which assets to buy or sell, but also what type of asset to buy or sell. Now let's look at how to answer the second key question on the financial markets: when to open and exit a position. There's an extremely useful tool for this, technical analysis. This is based on the study of historical price data and makes it possible to predict an asset's future movements. Unlike fundamental analysis, which requires a solid knowledge of economics for proper interpretation of the data, technical analysis is accessible to everyone. Everyone is capable of analysing a price chart. It's just a matter of practice. Within a few weeks, you can have visible results and be able to identify the right supports and resistances, the main chart patterns, and the most common Japanese candlesticks. Otherwise, you can continue to waste your money and time investing by instinct or clumsily trying to interpret economic and financial data. Technical analysis gives you precise position entry and exit points. It also makes it possible to identify troughs and peaks. The golden rule is simply never to anticipate movements. Simply wait for the buy or sell signal to be given on the price chart. It's as simple as that. So simple that no one takes the time to train well in technical analysis. Once you've mastered the tools of technical analysis, you can develop your strategy, the one that will allow you to generate additional income and perhaps one day achieve financial freedom. A strategy aims to exploit technical patterns that are repeated on the price charts. Whether you prefer to use chart patterns, Japanese candlesticks, technical indicators, or all three, remember that a strategy must remain simple. Developing a strategy is actually quite easy. Simply select the tools you want to use to get your buy and sell signals. The more tools you use, the more mixed signals you get, and the less you know what to do. It's a common mistake for novices to want to use everything. Almost all successful investors focus on 1, 2, or 3 tools at the most. For example, a strategy may be based on a few chart patterns or even a single technical indicator. Once you've selected your tools, you'll be able to perfect your strategy. Perfecting your strategy means integrating or removing elements of your strategy to make it as effective as possible. You then simply follow the buy or sell signals given by your strategy, so you know when to enter and exit positions. You go from gain to gain to reach your goals. There's a third and final question that must be answered to profit in the financial markets: how to protect your capital. With a good strategy, you can reach 70, 80 or even 90% profitable trades, but you can't avoid losing the trades. No strategy, and I stress, no strategy can profit every time. So you need to learn how to manage your risk. Risk management consists of minimizing losses as well as maximizing gains. You can't profit in the financial markets in the long run if you don't know how to manage your risk. You might come out in profit on a few operations, and then you lose everything in the process. You must therefore learn not to risk too much of your capital on your positions, to place and move your stop losses correctly, not to take positions if the risk is too great, and to respect precise rules. Managing your risk is actually remarkably simple. It consists of following Warren Buffett's advice. There are 2 fundamental rules to be respected in the financial markets. The first rule is not to lose. The second is never to forget the first. All you need to do is acquire certain knowledge to effectively manage your risk. This knowledge will also allow you to learn how to better control your emotions. The second, often overlooked element in protecting your capital is choosing a good broker. You can have the best strategy in the world. A bad broker can ruin your chances of success in the financial markets. Above all, you need to know how to identify well-regulated brokers who offer optimal protection for your funds. A broker authorized to practice in France is not enough. You're jeopardizing your chances of making it in the financial markets. You must avoid brokers with certain types of regulations, such as MiFID, for example. Choosing a good broker also means understanding the importance of transaction costs. These fees can eat up several % of your performance. You must therefore try to minimize them. Some financial products are more advantageous than others. Also, some brokers offer much more competitive brokerage rates than others. Finally, choosing a good broker means finding the one that is adapted to your needs. Depending on the financial products and the type of market you want to invest in, some brokers are better than others. By choosing the wrong broker, you may find yourself unable to apply your strategy correctly. Then you should look at the tools offered by the broker, which can be of great help in your investments. For example, some offer powerful market scanners that let you save valuable time in looking for assets to buy or sell. The successful investor method that I just gave you works for several reasons. Why does it work? It's a simple method to apply. All you have to do is acquire the right knowledge. You can succeed from scratch. You don't need to know the technique, nor do you need to know the financial markets. With this method, progress is fast, which is essential to maintain motivation and achieve your goals. You don't get discouraged. You want to keep progressing, but the most important thing in all this is that you understand what you're doing and why you're doing it. You don't blindly follow a strategy that you've been given. You're able to explain why you gained or lost. You know what works and what doesn't, and can use that to boost your performance. This allows you to easily develop your own strategy and evolve it over time to increase your revenues. Following your own strategy to the letter is simpler than following a stranger's strategy. It makes it easier for you to be rigorous and disciplined in your investments, which is essential for success in the financial markets. To answer the 3 decisive questions that every investor asks himself, you can now see that there's nothing complicated. Just take the time to acquire the right knowledge. It's the successful investor's method. Regardless of your knowledge or experience, simply let yourself be guided step by step so that you can develop your strategy and succeed in the financial markets. 2 groups of people are concerned by this method. First of all, there are financial market novices. If you're in this category, this method will see you through to your first profits. You'll gain confidence in your potential to succeed in the financial markets. The second group of people are experienced but losing investors. Regardless of whether you have 1 or more years in the financial markets behind you, this method will help you identify the elements that are preventing you from succeeding. You'll quickly see concrete results in your financial market performance. Little by little, you'll be able to erase your losses and regain confidence in your ability to profit in the financial markets. The next video is clearly the most important of this mini-series of videos. It will show you how to become a profitable investor. See you there soon.